Guys, sometimes that corporate Australia, we don't really know what they're up to. So we thought nothing best than to bring in some corporate lenders. Let's talk about what buyers in the marketplace are buying, interested in, and funding at the moment. Stay tuned.
Mario, Vasco, thank you for joining. Good episode this morning, guys. Very hard to get this insight. We're in small DY. These two money magnets are in the big smoke. Vasco, I asked you off air, what's the sentiment in the marketplace for some of these high-end corporate and private clients?
Yeah, thanks, guys, for letting us in again. I think Mario will probably elaborate a little bit more on the corporate side, but I'll elaborate a little bit about high net worth families and some of these business owners. I think the sentiment is, with everything that's going on with the war, oil, and that building is one of the questions where people are pausing. Some of the developments that we're looking at, people are just a little bit cautious considering the building costs. But then there's the element of the budget, Billy, that ultimately there's a bit of sentiment, but they are wanting to borrow. So liquidity lines is always something we talk to people about.
Yeah, interesting. Mario, what are you saying?
What do you think, Mario?
Yeah, thank you. Thanks, Mark and Billy. Thanks for having me on this morning. Look, there's no doubt there's a little bit of cautiousness in the market. Back end of last year, we were talking rates coming off, and lo and behold, here we are. We've had two consecutive rate rises, which is now impacting again on rising construction costs. So look, there's a reassessment, I guess, rather than a retreat. They're just businesses, developers are just re-looking at their feasibilities. It is getting harder to make them work. There's always going to be opportunities, and some will make them work. I did read in the AFI just over the weekend, Tim Gurner is because he knows there's a chronic shortage of housing, so he's pressing on. But not everyone has the luxury of being able to do that, to try and get a return on the risk developing residential. But there are some other asset classes. I mean, the point is there's a lot of capital in the market to deploy, with super funds and all the institutions that are coming into the country, because Australia's a relatively safe haven, and therefore you are getting institutional money coming in looking for assets to invest in. So yes, whilst there's been a bit of a pause, it's not a retreat. But they're now just looking at what asset classes can work.
Love that.
It's big. Guys, crystal ball. And I know maybe this frustrates people because I'm always such a long-term thinker with this sort of stuff. In 5 years' time, where do you see funding in the property market? Like, where are you going to see the money blossoming? As in, I know today we talked about build to rent a little bit before we came on air. We talked about funding. In 5 years' time, what's the landscape going to look like from today?
Maybe from a sort of corporate asset classes, which are coming through now. So the likes of co-living, student accommodation is a very hot asset class. I mean, I live in Maroubra. You drive down from the city to Maroubra along Kensington and Kingsford, and the amount of student accommodation that's going up around that area is just phenomenal. So that will co-living. This is caters to the rental shortage that we have. So this is an alternative residential asset class. It's fully furnished, 20-25 square meter studios with kitchenettes, but offering extensive living, communal kitchen, communal laundry areas. Are making that work because they're typically smaller land spaces required because limited parking. They're smaller schemes, so they could be 40 units or 80 units. They are getting a little larger, but let's say that 40 to 80 units, and then they're getting higher rental returns per square meter. So it's catering for rental demand for the key workers, for those relocating from overseas. You don't want to go out and have to go to IKEA and spend your whole weekends getting your white goods and your furniture and all this. These are fully furnished, minimum 3 months rent, so you can sort of check out the area, or whilst you're checking out other areas, it gives you a place to live, which is easy. It's in high urban areas, and it just caters for rental market. That's one. The other one at the other end of the spectrum is the sort of with an aging population, that whole over 55s living, the land lease communities they call it. That's again a really hot asset class that the institutions are looking to get into because Australia is an aging population, so there's going to be demand for that type of living.
VASCO, I love that.
Yeah, I'll just add, Mark, I think we all seen Metro and a lot of the, transport coming in, especially in Sydney. The government's obviously been doing TOD development, which is transit-orientated development sites that are coming through. There's a lot of, a lot of our clients still got ability to develop some of these assets. So in the next 5 years, if the question is what do you see, I'll see a lot of opportunities in still developments coming because there's a shortage. We cannot go past the airport, the new airport. We cannot go past the Olympics coming in Queensland. So I still see that property will continue to be one of the biggest drivers. And Murray just gave you 2 other avenues within that property space.
I mean, we've got just of housing. The government ultimately has to pull its finger out, and there's got to be structural change, and we can't just keep blaming external factors for what is an issue that the government should be solving for. Less red tape, less bureaucracy. Let's get developers through the system quicker to get to them turning soil, because at the moment still, I think it will come, but it's got to come quick.
Well, I've got a developer who's he typically develops sort of between 80 to 150 units in our local area, and he was telling me the certification went from 15 main certificates 20 years ago to 315 certificates today. It's a lot of work, and that's a lot of compliance.
That's time and money. That's what that is.
Yeah. Now, for people that are watching, this is where I think the biggest value add for me. I loved you. You guys are, you two gentlemen are lending for a lot of high net worth, particularly VASCO high net worth clients. I like the breadcrumbs, or I like the clues that I can get when I talk with someone like you, VASCO, about what these guys are actually up to at the moment and the asset classes that excite them. So hearing you guys today talk about those different types of asset classes that they're interested in, I think it's pretty cool to see the direction it's going. Are you centric to Sydney?
I'll answer that one first. No, we're seeing things across the nation, especially in Melbourne. We're seeing a little bit more activity at the moment. I'm seeing that is, that first home buyer, our clients' kids buying some of those properties. Obviously, we're seeing that across the nation. The other component I'm probably seeing as well in Queensland is the co-living and that living space. There's greater opportunity still there. So I don't see the markets being any different to Sydney. I think the opportunity of the residential, in which Mario spoke about, which is the development and the opportunity with the shortage of housing, that it's not just a solution of having big apartments, but also maybe the small apartments. And last time I was here, I still spoke about how Japan and how Korea look at one-bedroom apartments in studios. We're still not there, quite there.
No.
I was showing one on the weekend. It was like people had a bad taste in their mouth. And I'm
Really?
like, what's not to love here? There's a $200K discount for the same size apartment internally.
Yeah.
So it's funny. And people's attitudes, they are changing as they're seeing the price point. The value is speaking for itself.
Yeah, Mark, you asked a question. Yeah, we're also national. We had an opportunity land on our desk just last week, large format retail. That's still a popular asset class if you can get the right mix of retail. Whether it's a super cheap or whether it's a whatever that may be, and then have a mix of storage, smaller warehouse units, and I think you've got a couple of those on or have sold or have a couple of those online at the moment. Yeah, they popular alternative rather than sort of paying rent for the next 5 or 10 years. Why not buy yourself, one of those small warehouse storage units, which are, flexible, convenient, can be close to home. So that's also an asset class we see that will continue to be, in demand.
Okay. Lisa's just got a question. The lovely Lisa Novak. She wants to know who these incredible men are and how fortunate we are to have you guys online. Can you tell us for 10 seconds each what you do? And then I want to know what you would buy, given the information and the powerhouse that you work within. Where would you put your money now? Do you know what I mean? Given what you know. So over to you, Mario.
Over to me. Well, thank you. So I look after 30 years in and offshore. The opportunity presented 12 months ago to set up HTL Corporate Advisory. So it's a debt advisory business looking after property and non-property customers and helping them with their debt and equity needs. So we help them raise capital, we help them structure, we help them negotiate, and then we help with placing it, be it with major or private credit. I mean, we haven't spoken about the private credit market, but we are doing quite a bit with the private credit market. They've been very good to bring flexibility to customers because the majors just not necessarily there in all asset types. So they're bringing good alternative. So we help our customers raise debt and place debt, giving them the most optimal capital solution, giving them the best terms, conditions in the market.
Where would you buy? What would you buy?
Yeah, it's an interesting one. I've Italian background. I've always loved property. I do love resi. I still think, with that chronic shortage of housing, I still, when I'm looking out 5, 10, 20 years, I still feel that if you can feel that is the right asset class to focus on. But anything with the aging population aspect to it as well, I also think has longevity because we're not getting younger. So, probably sitting on the fence there with 2, but so resi with an aging population slant would be where I'd be heading.
Thank you. And before we go, Vasco, tell us with what you do at HTL, and where would you place your money?
No, good question. So HTL Private Office, we focus on families, individuals, a high net worth families. We work with them hand in hand. Some of the times we tender their debt, some to private banks or business banks. Some of the times we go straight into the lender that we think is suitable for that time. Our big piece is obviously create a competitive advantage, Mark, with the clients that we support, and having multiple offers from lenders are a big thing from us. We, like Mario mentioned, private credit's a big thing. The loyalty to major banks doesn't need to be there. It's property backed, so it's not the end of the world to go and get a second tier lender or a private credit provider to give you the debt. So we do anything from resi, commercial property, and all things that have a property attached to it. For me, where do I see the opportunity? I think storage. I like it. I like data centers. I like commercial property at this point. I think there's a great opportunity sitting there. Most people with an SMSF, they want to borrow under that vehicle, and they ended up buying resi when they already got a resi exposure. Australians love property. I think if I was going to diversify my property portfolio, that's where I'll be going, a commercial property with storage, and ultimately putting my self-managed super fund.
Can I give you guys a tip?
Please.
People hate dirty zoning. So if you want to get like a panel beater shop, a storage unit, a service station in, given all the compliance we've talked about today, it's very, very hard. So Vasco, I like your tip because I think it lends itself to scarcity, and people don't want to see these rezoned industrial areas. They are way, way out west where it's easy to get approved. And in parts of CBD, Metro Sydney, very, very hard to get. You're never going to get them rezoned to be storage or to be industrial. So I think they're as rare as hen's teeth.
Yeah, that's a good point there. Boarding houses. We spoke a little bit about it, Mario, how popular these student accommodation have become. Is boarding houses in that field as well?
I mentioned co-living, which is an upmarket boarding house. So yeah, most definitely. The difference between a boarding house have to allow for an element of affordable housing within them, but the co-living don't. But again, addresses a rental demand need. Absolutely. Absolutely. That's an area that some of that is going into, and they're going in the right locations as well. The high density urban, don't need a car. You're close to public transport. So again, it ticks a lot of boxes for that sort of end of the market that's looking for that rental.
I've got one more question for you both. The up and coming May meeting. What are your clients looking for? Just a couple of things they're looking out for.
Yeah, so the budget obviously is a big discussion point. I think there's three things there that I'll just be watching. The gearing component, especially if you've got two investment properties. The capital gains that usually it's now at 50%. It potentially is going to be 33%. So that then will impact some of the, Australians that have multiple properties and use gearing as an investment vehicle, as well as capital growth. And then obviously the trusts. I think there are three major things here that will impact. I don't think it'll be the end of the world if they were to all come through, but I think I think we need to really rationalize this, that change is coming, and you know, diversification is probably where this all sits. You know, can't just be property, but it can't just be all shares either. That's how I sort of look at this.
It comes back to that reassessment versus retreat. You know, as where not every people aren't going to pull out of the market necessarily. There's not going to be a whole retreat out of property. It's just going to be a reassessment to take into account things sort of potentially bringing around that the capital gains, around the negative gearing. It's just more noise, which adds a little bit more uncertainty, which means that people are just being a little more cautious, unfortunately.
Pound the landlord, guys. Pound the landlord. That's what the government's doing.
Yeah.
It's just, and guess what? The landlord is like the modern day farmer for property. You don't have the farmer, you ain't got the crops. You don't have the crops, you can't feed the people. So if they keep pounding these landlords, they're leaving the marketplace, and there's less rental properties. And what do rents do when there's less rental properties? Bang.
Yeah.
It's just dumb. It's just
And
dumb.
we've seen in the cost of living, right? In the last 2 years, they've been just pushing through every interest rate increase, and it's not going to be any different in the next two that are coming up. So, I think
Who cares about fuel? Like, you know, if you've got 14 rate rises, that's a hell of a lot more not to a household than filling 2 petrol tanks or 1 petrol tank. Like when these rate rises, I laugh because people don't know their interest rate, but they know how much they're paying for a tank of fuel per every day. They'll tell you what the Bowser price is every day, but they won't know their interest rate every day. It's the weirdest thing. It's cool.
That is so true, Mark. You know, that complacency of loyalty, my bank's looking after me or my lender's looking after me. It's just ludicrous, you know. It's just absolutely ludicrous, which is why, that every rate increase is straight to a business's bottom line, straight to its P&L. It hits
Bang.
Yeah, bang, absolutely bang. And then there'll be probably another bang in May and in our sort of second half of the year. So please reassess what you are paying. We're here to help. You know, we are certainly here to help. We can run a process. We're not about pulling you away from your existing bank, or lender, but it's about making sure you got the deal you deserve to have.
I hated the word pivot, and I loved the word pivot in COVID. You know, it was the most rivaled word in my brain through COVID, and I think right now it's happening again. And people talking to you guys about lending and what everyone else is doing is really pivoting. You're hearing what everyone's doing. You're looking at your funding. You're agile, and it's so important these days. So important. Gentlemen, thank you.
Brilliant.
That was very enjoyable. Thank you, Mark. Thank you, Billy.
thanks, guys.
For having me on.
It's great. Billy, do you have any questions before we go? You've always got the best questions.
After, call it 13 rate rises, then when would you advise your clients next to sit with their bank and check when their loan, and check if their loan is sharp?
Yesterday.
Yep.
Every day.
That's the answer I was looking for.
Yesterday, when you're sitting there on the weekend, having, that you could be saving that in your interest rate.
It's like going to the dentist or getting you're not really sure about the result that you're gonna get, but it's good for you. You've got to do it. You got to talk to your bank guys.
Yeah.
All right, gentlemen, thank you so much for your wonderful advice. Good luck in business and the landscape the next couple of months. We really want to have you on again if that would be okay.
Love to. Thanks, Mark. Billy?
Yeah, no, I would love to come back on if there's some insights that we can provide. Yeah, I'd love to. But great chat. Yeah, thanks so much.
Awesome. And for everyone watching, if you've got any questions about this, these gentlemen are happy to take your call at no cost, or I am, or Billy is, or just write your comments down and we'll engage later those questions with these guys. But guys, have a lovely day.
Thank you. Have a
Guys,
great
see
week.
ya.
all.
Bye.
Take care. Bye-bye.